Crypto Hotep here with another investing video. We are on week 40, the big 40, week 40 of the family portfolio and dividends tracker. If you're unfamiliar or if this is your first time watching these videos, feel free to go to the channel, go to week number 1. I go through my whole methodology and strategy. And basically what we did was I shortlisted several stocks for my family to choose from. They each chose their own stock, particularly for their likings. And we essentially used M1 Finance as our broker of choice. M1 Finance provides a way for you to create one big portfolio and have sub-portfolios, or what they call pies, within it. Each of my family members has a pie of his or her own stocks, and each week we go through these stocks. We go through any important news in the industry, how we're feeling, our emotions, and balances, as well as dividend activity. These videos, first and foremost, are for my own edification, and hopefully my family can see them in the future or whenever I'm gone, and maybe they'll be helpful for them. If they are helpful for you and help you with your investment journey, feel free to like, subscribe, comment, let me know what you think. But by no means is this financial advice. We are not telling you what stocks to invest in. Please do your own due diligence when investing into stocks. Now, with that out of the way, we can jump right in here. Now, before we go to week 40, we're going back to week 39 to showcase where we were at. So if you can't see that, my apologies, it's kind of blurry. But 1593.14 was the balance last week. The dividends earned was about $11.86, and we had about a 39% money weighted rate of return year to date. This week, we are at 1623.80. So we cracked that 1600 milestone there, which fantastic job. And you're going to see who is carrying the load here on the family portfolio. Spoiler alert, it's not me. Dividends earned, we earned $12.37. So we upped those dividends a little bit there. And then our weighted rate of return got boosted as well to 43.93% year to date. Let's see what's going on in the activity. So between this week and last week, we had several dividend activities. So we had dividends from ExxonMobil, Target, Chevron, Johnson & Johnson, Microsoft, O Realty, Cintas, and Moody's. Now, if you're focusing on those numbers to the right and you say to yourself, Crypto Hotep, those are just pennies, you're correct. We are not worrying about the dollar amounts. We just want to continuously get those dividends. And the way we do so is we hold these fantastic companies with great track records, and we accept those dividends when they come in. Now, the main premise is to up our holdings, up our position in these companies, and essentially that dividend will up itself as well. So that's what we're gonna focus on here. But all in all, very good dividend activity here. So let's go to the portfolios as we always do, and let's review bottom to top. As always, or not as always, but as of recently, my wife is on the bottom here. But I will say this, her portfolio has been gaining traction, and it's been encouraging to see. So year to date, we are down 10%. That's completely fine. Okay. Market gain is negative $6.93, and then dividends earned is about 59 cents. So this money weighted rate of return has compressed. So this has slowed down, which is very good. You'll see here Celsius currently is down 56% in the negative. However, this is also coming down because her Celsius holdings were around negative 65%. So we're somewhat trying to close the gap here. It is a big gap, but we are closing that gap, which is good. Pepsi down over 6%. Still not worried about that. Google and Tesla are the ones that are really catapulting her portfolio and also helping. And again, that kind of brings up to the point of diversification. You see my wife's portfolio here: Pepsi, Celsius, Google, Alphabet, or Google, Tesla, I should say. Celsius is the Achilles heel. Now, the good thing is, though, we have other good quality companies like Tesla and Google that are essentially bringing up her portfolio and standing it back up. Because if we just held Celsius and say Pepsi, we would definitely be underwater extremely right now. So it's good to have that diversification. And this is a prime example why I would say you can over diversify where you're not really getting any gains. So you can have too many stocks, but I think diversifying when you're first getting into investing is key. So all in all, we are closing the gap. This is encouraging to see, down over, just 10%. And I know if you are a stock aficionado, you probably gasped when you said down, negative 10%. I also delve in with crypto, so being down 10% isn't that bad. So very, very good to see. Very encouraging. Let's go to the next. We have our middle stocks. And our middle has always been like the little engine that could. Consistency has been key. Very good companies that are being held: Amazon, Target, Costco, Starbucks, Nintendo, Tesla. Mostly all in the green except Target, which again, they were still kind of, they still had some headwinds going on from their earnings call that they mentioned, and that's the reason why that's in the red. But all in all, the money weighted rate of return got boosted up over 30% year to date. Very good. Market gain of over $20.61 with 49 cents dividends earned. This is a very solid portfolio here for our middle. I wouldn't change anything as of right now. These are just all good quality companies that I would just continue to hold. So very good portfolio there. Now let's go to our youngest. Our youngest, again, you're going to start seeing these returns that are in close to the hundreds, and they're not typos. So our youngest, again, with a monstrous year-to-date weighted rate of return of over 67%, market gain of over $45.57 with 36 cents dividends earned. We're only holding 4 stocks here: Nintendo, Tesla, Apple, and Starbucks. And that Tesla return, holy cow, up over 150% year to date. And the biggest thing that I do want to say here is, when you're first starting out investing, you may not have a lot of money. And the good thing is, these platforms like M1 Finance, even maybe a Robinhood, Webull, whatever, they do provide a way for anybody to start investing with any type of capital, any type of cash at all. So there really is no excuses. But the biggest thing is, you can't try to keep up with the Joneses when you're investing, and also on social media like Twitter, following other investors, so forth and so on, because those investors have probably either been in the game a long time, either have a whole bunch of capital to start out with, or they could just be fake. So I think the biggest thing is focus on your gains in percentages, because in that way you can say, well, if I keep building these positions up, it's going to be X, right? It's going to be X amount. So all in all, this is, again, a fantastic portfolio. Tesla, we were buying Tesla, rain, sleet, or shine for our youngest, because that was one of the that was one of the stocks that our youngest chose from the very beginning. And you can see that's a prime example of holding a quality stock from the beginning of the year through the FUD, through the doubt of Elon and everything, and just believing in it. So just fantastic. And you are witnessing history if you've been following these tracking videos. That is correct. Our oldest has dethroned me as the top balance. So I am second to the top now. And we will go into my portfolio. And it's funny. It's really funny because we see the 60%, the 30%, and my weighted rate of return year to date is not even 20% yet. It's 19.99%. Market gain of over $79. Dividends earned though $8.31. I'm not mad at that at all. And we can jump right in here. So majority of the sectors are in the green. Technology, per usual, is in the double digits on the return. We also have industrials that are in the double digits as well. And again, Cintas is a very good company to hold, very good dividend company to hold. Deere & Company is doing its thing. Waste Management, I never thought I'd love trash the way I love Waste Management. They're very consistent. It's a very consistent company. Exxon is down over 5%. I'm not too worried about that currently, especially with the different political factors with oil and everything that's going on. I'm not really worried about that. Finance up over 25%. Pharmaceuticals are down. Pharmaceuticals, as we all know, I'm holding Johnson & Johnson and Pfizer. Both of those are down considerably. But we are still holding those. I like those as dividend stocks. I like having some sort of exposure to that pharmaceutical realm. But this percentage of gains right here for your growth and meme stocks is ridiculous. Over 118% year to date. And if you've been following, you know what I have in this portfolio. We have Tesla, Palantir, MicroStrategy, which congrats to MicroStrategy for getting into the NASDAQ 100. That's a fantastic achievement for Saylor and his company. Fantastic. DTE and then CrowdStrike right there. So how do I feel about my portfolio? I still feel good about my portfolio. The weighted rate of return when you're comparing it to our oldest or comparing it to our youngest, it's not as big as them. But again, going back to diversification, I have about 50 holdings, 50 stocks in my portfolio. So your weighted rate of returns are going to be less than a more focused portfolio that has maybe 4 to 6 holdings, which is completely fine in my book. Because it's good to weather the storm as well, because everything just doesn't go straight up. Price doesn't just go straight up. So it's good to have somewhat of a little bit of security in case of a downturn there. And last but not least, we will go to our oldest. Rub your eyes. That weighted rate of return is over 100% year to date. Market gain of $131.45. Still getting a little dividends at $1.78. Just fantastic. And this chart is crazy. It just keeps going up and to the right. It's tremendous. And you can see everything is in the green. Tesla, Apple, Costco, McDonald's. Costco had pretty good earnings this week, which was good. Apple made a new all-time high. It's really funny because Apple made a new all-time high this week, but it was very, very quiet. It was the quietest Apple all-time high I've probably witnessed. And that's because everything with crypto, Bitcoin, but Apple made a new all-time high. They also made news that they were working with Broadcom on developing on further developing AI. So that's a very strategic move by Apple, and I love Apple for that. Tesla, again, up over 99% on Tesla. What can we say? We love Elon. And then McDonald's up over 6% on Elon, or on McDonald's. So not bad, not too shabby there. It's a fantastic portfolio. I've always said this about our oldest portfolio, that it's very simple, but it gets the job done tremendously. And now that we added Tesla in there, it just boosted the portfolio even more so. So just a great job overall here. And as always, we will kind of recap what happened here this week. So all in all, year to date, family portfolio 43.93% year to date. Amazing. With a market gain of over $250, dividends earned of $12.37. That balance has boosted past 1600. We cracked 1600 at 1623.80. As a reminder, if you are frustrated with investing because maybe your balances aren't that big right now, let me tell you, we started with around $200, $212, say $213 in February. Now we're at 1623.80, and that's the magic of investing your money instead of keeping it in a bank stagnant, and then also letting the market do what it does. We're not day trading these stocks. We're not quick flipping them or anything like that. We're just holding quality companies and letting the market do its thing. So, as always, guys, I hope this video has been helpful. Feel free to like, subscribe, comment. Let me know what you think. And as always, thank you and happy investing.